Why are you listing at this point, and especially by introduction?
Well, firstly, Larry, let me do a little change that has occurred. The date of 19th has been changed, and we'll be advising in due course because of certain unavoidable circumstances. As you know, we were also having arrangements for guests of honor, and you know there are certain things that have happened, and but we will be advising in due course. But everything is set. The reason why we are listing by way of introduction is, firstly, we want to our shareholders to have price discovery through the mechanism of open trading in the main counter. There are many shareholders, especially cooperative societies with large holdings, and we cannot continue relying on the over-the-counter trading that was hitherto the case. We are also going to list by way of introduction because we are not raising any money right now. As it is, we have enough share capital right now to meet our expansion needs, and therefore we did not wish just to raise money without proper cause. But in going by introduction is also a way of preparing ourselves for future IPOs, and so that we can be able to raise capital to meet our expansion needs.
Right.
So those are the two main reasons right now.
I need for you to cover this just for the avoidance of doubt. The reason why you're postponing the listing date is because of the helicopter crash that killed some ministers in Kenya, and because of the complications that comes with that. Is that the case?
Not really, but we were expecting some confirmations from government quarters for the guest of honor, but I wouldn't say that that is the main reason. But as you know, a lot of things are happening now, even getting to get the people that we were arranging with. It will take a bit of time now.
All right.
With all the arrangements that are going to be there. And we are also sensitive about what has happened.
Fair enough. Your listing price is 3 shillings and 50 cents, 2.1 billion shares, I believe. How did you think about pricing this where it is?
We were conservative because we also wanted to give some discount. The price in actual sense is discounted at about 8%. And we did not want to be very ambitious in terms of entering the market with a high price. We are, basically our business model is that one of being long-term, having a long-term perspective. We look at the future, not just tomorrow. So we don't want to enter the market with an ambitious high price that may not be sustained. And we believe that is the right price for us, and being discounted. And we would like the market to be the one to prove us right or wrong. And we can only, but we have every expectation that the price will definitely go up.
Explain the shareholding structure for us, because CIC Insurance is very heavily backed by the cooperative movement, the majority shareholders, and just explain how those dynamics work into how the company is owned right now.
Indeed, and you know that is quite a major strength. For your information, the cooperative movement is the anchor shareholder. Right now, having 75% of the shareholding, and with the 25% being owned by individual cooperative members, and that is what we are going to offer for trading as we list, and it will now be open to the Kenyan public in general. Within the 75%, the cooperative shareholding, we also have the strategic investor, and that is the Cooperative Bank of Kenya. And that shareholding is held under the Cooperative Insurance Society, which is the anchor shareholder, putting together collectively all the cooperative shareholding. And it is mainly going to be the driver in terms of the strategic direction of the organization, noting that this is a very interesting arrangement. The main shareholders are also the main customer base. You can see the synergy thereof. The company can only benefit from that, and in a big way.
You're also talking about regional expansion, specifically Rwanda and South Sudan. Any specific timelines for these?
We expect to go to Southern Sudan within the next 1 year. Like I said, this follows very closely on the heels of our sister organization, the Cooperative Bank, which is going to open shop in Southern Sudan, and it is only logical that we would want also to leverage on their network there as they go there. It will be easier for us to start off that way. It's a good platform, and that is why within our priorities we target Southern Sudan to be our first port of call. After that, we intend to go to Rwanda because we have already identified some prospective partners. One interesting thing about our model as a cooperative is that even as we go regional, we would want to identify partners who we can partner with, empower them, and therefore the entity that we create will also enjoy the goodwill of the locals. That is the whole essence of cooperatives, that we export the cooperative model, but we would like the locals also to partake of the fruits of what we are going to export there. So hensely, we also create goodwill for the entity. We are not going for 100% owned subsidiary.
Just very quickly, your financial projections, 30% growth in profit before tax last year to 605 million shillings. Where are you growing financially?
We are actually growing in the top line. Our revenue, like last year, we grew at 48%. The previous year, we grew at 58%. So we have managed to sustain a high growth rate despite an average growth rate of the market around 14–15%. So we have outgrown the market by a far and wide margin. The other one is that we are one of the few companies that are making profit from the core business, that is underwriting. As you know, this is a very tight market, and many of the underwriters have been making losses in the core business. And we have also been making money from investments. We are also quite conservative. In terms of our investment, we don't do a lot of speculation, and we hold a lot of our money in government securities and bank deposits. Our liquidity is good. So this is a combination of prudent underwriting that enables us to make a profit on the core business, and then getting a lot of investment return from the volume of investable funds also increasing from rapid increase in the volume of business. Of course, the other one is the fact that
Mr. Kuria, I'm sorry, we'll have to cut it there. Many thanks for joining us. Asante sana. Nelson Kuria, Managing Director at CIC Insurance Group, with us in Nairobi.